Hello everyone, welcome to the market snapshot for today. So what are markets telling us? I guess markets are telling that if you're sectoral in the Indian markets, you have got very good opportunities and it's time to become little cautious in the US markets. Let's look at the numbers. Nifty is at 24,287, Nifty 500 23,664, Nasdaq 129,995 and S&P 500 at 7745. This is Nifty 500. The advances were 246 against declines of 254, and new highs are 8 against new lows of 492. Not much more improvement, and the breadth is not improving, and that is the reason I said for the Indian markets, if you can play sectoral bets, very good opportunities. But if at all you want to go all in across indexes, I think you might struggle a lot. So that is the reason. When I say sectoral, which are the sectors, wherein I find a lot of strength, majorly into, core factors, which drive an economy in terms of consumer durables, reality, healthcare. These are the sectors, and this is common in both the markets, be it the Indian market or the US market. Somehow, I think the market as a whole doesn't have a lot of strength, and that is the reason we keep saying the momentum not coming in, the breadth not picking up. There's a lot of volatility in participation, and I mean these things are very consistent. It's not that it happens today and it changes tomorrow. No, I think it has been very consistent from almost like 2 months now. So that is the reason for the Indian markets, if you're looking to play sectoral bets, very good opportunities. But if you're looking to go all in across indexes, I think you might struggle a lot. This is the chart. So Nifty gained a lot of momentum here and it has almost given up everything. Just look at these sessions. I mean, I don't know, maybe 9-10 sessions of Nifty just kept coming down. So that is the reason I'm saying if we look at these sectors, the indexes as a whole, we are not seeing much strength. Same is the case with Nifty 500. This chart doesn't look as bad as Nifty, but the thing is, it is almost replicating. It is just that maybe at a slightly higher level, which still makes it little more positive. And that is what I have been saying. A lot of strength would be in Nifty 500. The reason being, this index, gets covered a lot of different sectors well, wherein if you look only in Nifty 50 in isolation, it is majorly, those big IT companies, financial companies, manufacturers, like top 50 companies of India. But in this case, you will see a lot of other industries too getting covered well, and that is the reason, I think this is where you should be playing your bets in Indian market. And if at all you can go little more microscopic, which is sectoral, I think that will be really helpful. So overall, the sentiments for the Indian markets, both the universes, that is 50 and 500, remains bullish, trading above 50 MA, but participation is mixed and the breadth is mixed too. And I think it doesn't gains momentum maybe this week and next week, I am looking that maybe even this breadth might deteriorate and become weak, which will be a bad sign for the markets. But I mean, I would still give it maybe next 7 to 10 sessions to just evaluate. I'm not someone who believes in anticipating or predicting. I will just follow the markets however they behave. I'll just try to react to it. So overall, from the Indian markets perspective, my takeaway would be, if you can play sectoral bets in maybe indexes like Nifty 500, you are looking at good opportunities. But if at all you are going to play bets across markets, I think there is a lot of chances that you might struggle. This is S&P 500, 129 advances to 371 declines, new highs 11 to new lows of 489, and the breadth has deteriorated significantly. I would say the breadth was looking very beautiful. I think if at all you have been following me, you would see in all the previous videos, if S&P 500, the breadth was very strong, and that is the reason I say I'll be cautious. So this is the first data point which tells me that I need to be little cautious in the US market. Above 20 EMA 290 stocks, above 50 EMA 315 stocks, above 200 EMA 342 stocks. Is this breadth bad? For sure it is not bad, but what I'm not liking, the fall in the breadth. For instance, I think above 20 MA has fallen almost by 7-8%. That is not something, which is usual. 7-8% of advances declining, I will take that any given day. But 7-8% of breadth declining, I think that's an alert for me. I mean, the market is alerting that everything is not looking so good. Although when we will look at the chart, these chart looks absolutely bullish, nothing wrong about it. But somehow this data point tells me that it's better that I remain cautious in the US markets. Nasdaq 100, like I said, if you look at the chart, there is nothing bearish or sideways about this chart. This is an absolute monster of a bullish chart. I mean, very, very strong chart. So looking at this, we cannot tell that it is time to remain cautious. But I think at least one data point, as I told you, is telling me that I need to be cautious in the US market. Same is the case with S&P 500. It's trading at its all-time high. I mean, like what better can you expect from a chart? So the chart is very, very strong. It is just that the data points are not supporting the rise, and that is the reason I'll be cautious. This is Russell 2000, and I think it is very similar story to what is happening in the other two charts. So let's look at the overall sentiments in the US market. For the Nasdaq 100, it is still bullish, trading above 50 MA. Participation has become mixed and breadth is strong. S&P 500 bullish, participation is mixed and breadth is still mixed. Russell 2000 bullish, participation is weak and breadth is mixed too. So like I said, I mean, here also, like if you want to play defensive sector, that is where you should be concentrating. Again, I strongly feel it is time to become little cautious in the US markets. I will tell you the second data point because of which I feel US yields at 4.72. This is the biggest reason because of which I'll be cautious in the US market. I mean, see, the thing is, the bond market cannot be pumped and dumped. It is too big for, I mean, be it retailers. I mean, I don't think I should be even talking about retailers. I mean, even at institutional level, that market cannot be pumped and dumped. That is how liquid the market is. It is a 40 trillion plus market. And if yields are rising, I will have to trust this rise, as simple as that. And if US yields are rising, so what might take, and maybe the breadth is not supporting, that those two factors are strong enough to tell me that I need to be little cautious. Do I remove every position from the US markets? Of course not. If you are already in, just play your bets with your stop losses. But in case if you're planning to make new positions, is it like you shouldn't make? No, definitely not. But your exposure should be around 40%, 50%, at max 60%. You should not be going all in. And these two are very, very crucial factors, I feel, because of which we need to be cautious in the US market. Dollar has given some hope, some strength to the equities market, and maybe that is the reason we keep seeing the rise. VIX at 1519, I mean, honestly, it doesn't tells much. I mean, it tells us that the market is neutral, which I feel is not. Bitcoin 64,144 has given a good, I mean, I think almost 4,000, maybe 3,000 points of rally yesterday. I don't know if at all you have been following. Uh, did you utilize that? Gold is looking absolutely good. I think one of the best instruments to trade, swing, position, hold whatever you wish to. So, like I said, this is something which might be fueling the rise to the equities market, which is the falling dollar. But I would want it to fall further. That is what is something which will be helpful, be it for the US market or the emerging markets or any markets globally. Bitcoin is basing, like I have been saying, these are very, very crucial levels. It can break out, it can break down. I don't want to predict whatever it does. I'll just follow. That is how I play my bets. But for sure, it should be part of your watch list. Gold is looking very, very good, giving you ample of opportunities during the day if you want to hold it. I mean, just buy the dips is the kind of scenario for gold. So overall, like I said, Indian markets, if you can play sectorally, very, very good opportunities. US markets, again, if you can play sectorally, be little conservative if you are a new entrant, good opportunities. But if you want to, enter with all guns blazing, I think you'll struggle a lot in this market. The VIX at 1515 doesn't, tells much, but I will tell you the market is very, very volatile, and you will have to trust the rise of yields. US yields cannot be pumped and dumped, and that is the reason my weightage to US yields rise would be higher than the rise in the equities market, and that is the reason I'll be little over conscious in the US market. 50% exposure for a new entrant is the max which I am looking at. That's everything from my side. I hope you all found this useful. Thank you so much and have a good one. See you next time.